We had market-moving earnings reports this week out of Taiwan Semiconductor and ASML. And on this week's Semiconductor Show, we'll talk about those earnings, but I also want to talk probably about the big news of the week, and that is Intel. Multiple headlines coming out of Intel. We'll discuss Intel, Nvidia, and we'll go through the technical charts as well. What is going on, investors? Hopefully you guys are doing well out there. Time to kick it off with Intel as they report their earnings later this month. I believe on October 31st, we'll be getting an earnings report with Intel, which really could decide the direction of the shares, at least in the shorter term. Look, over the past 5 days, though, Intel shares down by about 2.3%. That's after Goldman Sachs cut its earnings estimates on muted PC demand. We saw a similar headline as it related to Apple. Their PC sales looked like they were struggling, at least in the most recent quarter. And this is kind of a back-to-school season as it relates to PC shipments. So a muted sales for Intel, not necessarily a good thing. And the reason why PC sales, we focus so much on Intel, is that is the largest business from a revenue and certainly a profit perspective for the company. In the last quarter, they had over $7.4 billion worth of revenue off a desktop, notebook, and basically client computing sales. And that was a rise over the previous period where you had about $6.8 billion in revenue. More importantly than that for Intel is it's the profit center. It's the only business unit that is generating any real significant product income. And that is to the tune of $2.5 billion in the most recent quarter. That was up over $2 billion in the previous quarter. For a company that is projected to actually lose money in the most recent quarter, its PC division is going to keep this company afloat financially to a certain degree. So strength in that PC market is certainly beneficial, and Goldman Sachs, at least at the current time, is seeing muted demand there. We'll see where it comes out, but we talked about the fact that analysts have almost no confidence in the company in the most recent upcoming quarter. Again, this will fall in the last week of October. In fact, the last day of October is when we're expecting to hear earnings from Intel. EPS estimate is for -3 cents. The company will probably have some one-time or some restructuring charges as they continue to lay off employees. I believe some of those charges will fall in the most recent quarter, so they'll give you an adjusted number. You could factor that into your own valuation, but this is a company that's constantly been restructuring really over the past decade or so. From a revenue perspective, we're expecting revenue growth declines of about 8%. It'll be key for the fourth quarter as well. You're expecting revenue declines of 10%. Now, we are expecting revenue declines, but if Intel has a decline less than 10%, that'll certainly be viewed as a positive. I think the challenge for Intel is to convince investors as we move into early next year that positive revenue growth is on the horizon. Now, they'll be lapping and going over some quarterly earnings reports, which could be easy from a revenue perspective and maybe an EPS perspective to beat. And so that could factor in the company's growth rate going forward. Now, the company is frantically trying to raise money. We didn't bring up Intel's balance sheet, but it probably isn't going to look good when we look at the balance sheet on October 31st. Now, the company is seeking billions of dollars for a minority stake in its Altera business. Now, this is a business unit that the company bought back in 2015 for $16.7 billion. So the company is valuing, at least in the open market, Altera at about $17 billion. So not much of a gain from a valuation perspective since 2015. And the interesting thing enough, if you come to Intel's financials, you actually get a view into Altera's business. Last year, on a quarterly basis, they generated $848 million worth of revenue. Unfortunately, something happened this quarter and it fell off the map down to $361 million. So more than a 50% decline in revenues year over year. And they're out trying to sell a piece of that business. Probably not the right time to do that, but maybe they're able to convince investors that the earnings and revenues are coming back. As you'd imagine, the profits from that business shriveled up. $346 million in profits off of just $848 million in revenue. So Altera, when things are good, is decent revenue and really, really strong operating profits. And this year, though, however, on a quarterly basis, the company lost about $25 million. So currently struggling in the most recent quarter. That's another piece that we'll look at on October 31st, we'll look at that Altera business if they haven't been able to sell a minority stake, although this has been floated around for several weeks now, and so the company is trying to find a buyer. Now, one company that could potentially buy Altera and other parts, maybe all of Intel, is actually Qualcomm. And this was a very, very interesting headline that really flew under the radar of most investing sites. And this is according to Bloomberg, that Qualcomm is expected to wait until after the United States election, which I believe is just maybe 2 weeks away, maybe 3 weeks. I see 16 days. We'll get to the poly market forecast here in a moment, but they will make their decision on Intel until after the election. That just shows you how they feel about the current administration as it relates to large companies like Qualcomm acquiring parts or all of another large company. And it probably gives you an indication on where they think former President Donald Trump, if he is able to make a return to the White House, that Qualcomm thinks his return back to the White House could actually produce an Intel and Qualcomm deal. So as you're watching the election results cross, hopefully maybe on that Tuesday, but if they drift into the subsequent days after that, when the final decision comes down on who has control of the White House, they obviously get to appoint the chair of the FTC, which has a big influence on whether or not these types of deals come down. Also, Donald Trump has been campaigning with Elon Musk, who has basically pledged to slash the size of the government, very similar to how he did over on Twitter or X. And so there could be some massive change in government regulation. If you have less government regulation, well, Qualcomm can pretty much do whatever it wants, or for the most part, do whatever it wants. Maybe can buy pieces of Intel or all of Intel. Now, the Harris administration, you'd have to expect, would continue some of the things that happened in the previous administration, including maybe keeping current FTC chair Lina Khan, who has a very opposed stance to large companies continuing to get larger through acquisition. Where you stand on that issue really is not here nor there, just giving you the idea of where things could fall just 19 days from now, or 16 days from now, although we might not get election results until 19 days later. Who knows what happens? They can't seem to count all the votes here in the United States the day the thing happens. But when we do get the announcement, things could really change from an investment perspective, particularly with large companies acquiring other companies. At the current time, as we sit here today, 16 long days from the election, the betting market, which I don't know if I take a lot of stake in this, and I hear different types of people either give poly market a lot of credit or this is just gamblers betting speculatively on one side or the other. But for the most part, if you look at the betting market, also if you look at the different types of polls, particularly in the swing states like Pennsylvania, Wisconsin, Michigan, Georgia, North Carolina, Nevada, and other states, that currently former President Donald Trump holds a small edge against the current vice president. And so again, if that is the case, it could usher in a wave of M&A, mergers and acquisitions, those types of transactions. And in some ways, that could create a floor underneath Intel stock as buyers will continue to circle around the company. And if they are able to circle around the company, well, that could be a good thing for Intel in the long run. Now, Taiwan Semiconductor confirmed this week that they are not going to buy Intel's foundry business. And here's one important point that I think most investors and most people actually forget about Intel's foundry business is, at least in the facility that they're building out in Arizona, Intel actually doesn't own the whole facility 100%. That is because they partnered with Brookfield to invest $30 billion. This was back in 2022. Brookfield ponied up as much as $30 billion to get a 49% stake for two of these new leading edge chip factories in Chandler, Arizona. So when that facility comes online and Intel starts generating revenue and, more importantly, profits, they're actually at a 50-50 split with Brookfield. So if you were to buy the Intel foundry business, you would actually also have to buy out Brookfield, which is almost a 50-50 owner in the facility. And so it complicates the situation. And this is always why I've been muted on my optimism around Intel in their foundry business. First of all, you can just go look at it from a revenue perspective in their most recent quarter, they lost $2.8 billion on their foundry business off of $4.3 billion in revenue. In fact, you had very little growth on the revenue side, and you burned through more than $1 billion more on the operating side. So the foundry business is not profitable. It's not really growing rapidly from a revenue perspective. And on top of that, their new facility actually is a joint venture where they're going to have to split any profits with another company. So it's not necessarily as attractive as many want you to believe in the investment community. Now, speaking of the investment community, they are incredibly bullish, as you'd realize and understand at this point, on Nvidia. The company hit a fresh 52-week high after we got those earnings reports from Taiwan Semiconductor this week. Everybody viewing that as bullish, including Bank of America, raised its EPS estimates on Nvidia. And now what we are seeing here, and this is a consensus revenue trend, and this gives you kind of a graphical perspective of how Wall Street analysts has kind of viewed with optimism that they continue to bump up. This happens to be a revenue target. You flow up here to EPS. It continues to flow up. Now, we have seen over the past couple of months, basically a general consensus of where revenues are going to come in. So we actually haven't seen a continued rise over the past couple of months. This, I think, is a mistake. I think Nvidia is going to report earnings about 30 days from now, and I think they're going to surprise to the upside in the most recent quarter. That's not necessarily a surprise, but I don't think this $36.5 billion in the Q4 is going to be high enough, and I think we're going to look into fiscal Q1 of next year for Nvidia and think that $39-40 billion is not nearly high enough as well. You are seeing some drift higher on the trend for the revenue, but I think that is going to continue to push the estimates higher and ultimately shares of Nvidia higher as well. And Wells Fargo noted that their new Blackwell design has a massive price increase. A system cost nearly $500,000, $500,000. Previous systems of the previous generation, the H100, was about 40% lower than that. So you've got a 40% price increase. And I think we can all sit here and say demand is probably equal, maybe even greater than it was for the H100 systems. Now, company that really sent the semiconductor market moving this week was Taiwan Semiconductor. Shares of the manufacturing giant up over 4.5% on the week. You want to see this technically as well. We already did a video on the main channel, but revenue came in 36% higher at about $23.5 billion. The CFO is expecting 2025 CapEx. CapEx is capital expenditures, the money that they spend on these big fabricating and manufacturing facilities at Taiwan Semiconductors. And he's saying that it's very likely to outpace 2024. That has no impact on Taiwan Semiconductor. They have the revenue, the profits, the operating profits to finance this. Who this impacts big time is its competitors in the foundry business, including Intel, not Donald Trump and Kamala Harris, but actually Intel is trying to compete with them on a foundry perspective. And when their foundry is not growing very much from a revenue perspective, and when it is unprofitable to have companies like Taiwan Semiconductor continue to expand their CapEx into next year, probably not good news for Intel at all. Now, here's the thing about Taiwan Semiconductor, though. The headlines are all super rosy right now, but that can change. The election can change these types of things. The headlines around China, the headlines about U.S. slipping into war. We're already in war with, or supporting war in other countries. But you got to understand how the mainstream media works here in the United States. If the poly market is accurate and you get former President Trump back in office, they are going to turn from positive coverage about the United States to completely negative coverage and fear-mongering coverage, because that is what's going to get clicks. I'm not saying that's right or wrong. I'm just saying that is what's going to happen. And when that happens, you could have further headlines surrounding companies like Taiwan Semiconductor, which have adversarial relationships somewhat with the country of China. More headlines come cross. We had some headlines cross this week as it's dealings with a Chinese chip maker that Taiwan Semiconductor has potentially been breaking or going against those export restrictions on different types of high-end chips. That will be interesting to see in the election as well. Folks, we are 16 days away. I know everybody votes one way or another, and I don't care which way you vote. I am just saying when those election results happen, now we have to put aside who we voted for, who we didn't vote for, and start making investing decisions on the hand that we are dealt with. It might be the candidate that we voted for, it might not, but that's the hand we're going to have. And these export restrictions, which really have been started to be put in place in the Trump administration and then carried over and expanded in the Biden administration, we'll have to start evaluating if these will continue as they've had over the past couple of years. Or again, do you get this massive deregulation cycle in Washington, which I will hesitate to believe until it actually comes to fruition. But if you do get that, well, export restrictions might go by the wayside. Now, the other headlines which will pick up steam in the mainstream media and then probably financial news networks, and they're always out there, is the fact that China is imminent invading Taiwan. So this hasn't been caught by the mainstream media, but again, with a different president and a different tenor of the news, this is something that could get picked up. And that is President Xi of China asked its troops to prepare for war. This was reported by Chinese state media. Now, I wouldn't expect anything different from a country president visiting troops, which is where this quote came from. The president is in front of troops and he's telling them, prepare for war, prepare for those types of things. I don't expect anything different, but the difference will be the media coverage of this type of thing. This was just picked up on kind of fear-mongering YouTube channels, fear-mongering news networks, or news networks that report everything that comes out of China. Now, again, these types of headlines cross all the time, and they start carrying over into financial media. That could push down shares of Taiwan Semiconductor. Now, ASML had a bad week. This is the lithography maker that has its machines hopefully inside of all the new Intel foundries and the TSM foundries, and they certainly will. Now, over the past 5 days, though, the stock got absolutely blasted, down 15.8%. We'll show you technically there's an opportunity here. Now, it was really the bookings number, which is the business that the company is booking today to realize in subsequent quarters. It was just $2.63 billion. It was a number very similar, though, that we saw of Q3 last year, and then you got a quick bounce back at ASML. That tends to happen, that maybe some business that was supposed to show up in Q3, that customer got delayed. Maybe that customer wants to wait till after the election. That customer is waiting on the construction in Chandler, Arizona, waiting on construction or financing or interest rates to drop. All those types of things. These are very expensive machines. More than likely, money is being borrowed to buy these machines. So it wouldn't surprise me in a dropping interest rate environment that actually companies put on hold purchasing equipment like ASML until they get maybe further drops in interest rates, which pretty much every central bank has been telegraphing. Now, it was removed, though, as a top pick from Cantor Fitzgerald after the weak guidance that we got. And then obviously you see here the expectations. This is a graph of the revenue trend. This is Wall Street estimates. You are seeing when these graphs decline, it means that the expectations are reined in. This is a good thing in the future if, the company can at least meet these expectations and more specifically, maybe outpace them. Revenue for the next couple of quarters is still expected to grow rapidly. I would say it's not until you get into the middle or late next year, which will be critical for ASML. They need to prove that they're going to continue their revenue growth, and that calls for that revenue growth to slide into the back half of next year could be premature. Folks, let's get over to the technical segment. The SOXX ETF still looking absolutely beautiful. We've got a longer term trend, which is this purple line down here. We won't really focus on that because it's more this intermediate trend, which has been intact since 2022. This is still very much intact. You could actually buy, if you have no, I don't know if you were tuning into this show, that you have zero, outlook or zero exposure to the semiconductor business. But if you're underexposed or you're trying to build up exposure, this could be your area. Now, the SMH is a little bit higher. They have a little bit more concentrated exposure into Nvidia, Broadcom, I believe, as well, with both stocks hitting basically fresh 52-week highs. You still have upside left in this one. We talked about how Nvidia hit a fresh, I believe, intraday 52-week high, and it's good enough for me technically to say we've created a new higher high here. At the very least, you took out the highs that we made back here in August. This is looking absolutely fantastic. Earnings, though, with Nvidia will fall after AMD, Intel, certainly the lithography machines, manufacturing facilities that we saw this week. You won't get earnings until the middle of November. So we're still just over or less than a month away on this one. Also, the election could move this one around. What also can move Nvidia around is the CapEx guidance that Amazon, Google, and Microsoft give on their conference calls. And certainly if those companies report very rosy type revenue and investors continue to stay excited about AI, well, that will increase the bullishness on Nvidia. So all other software companies like ServiceNow, Salesforce.com, those companies report really, really bullish type of reports, and they say, hey, we're going to continue to invest in AI because we're seeing revenue growth or customer interest. Well, that is something that could certainly benefit Nvidia going forward. AMD will report their earnings really not long from now on Tuesday, October 29th. So we'll get them, I believe, 2 days before Intel. It's setting up really at the top of the range. We have kind of flagged out at this area. That makes a little bit of sense because as you move into earnings season, you're really looking for a break one way or another with AMD, and I think you're going to get it. So that'll be an exciting trade. Broadcom looks almost identical to Nvidia. We've basically set up at an all-time high here, and you're just waiting for earnings on Broadcom. They fall much later than the vast majority of these companies, not until December 5th for Broadcom. So they're very late in that earnings cycle. Like we talked about with Intel, company will be reporting their earnings on Thursday, October 31st, again, 2 days after AMD. So that'll be interesting to see if there's any reaction when AMD reports. If AMD's results are really good, it actually, in some ways, could hurt Intel. You have found footing here. And again, you have these election kind of undertones in a company like this. If you get a deregulation environment, I think you've potentially seen the lows in Intel because people are going to come in here and try to either scoop this entire business or they're going to try to scoop pieces of this company. But if you continue to have Intel stand on its own, well, I don't think those earnings reports that they report at the end of the month are going to be good at all. Now, Qualcomm is looking absolutely fantastic. We have just confirmed a new higher high. We're sitting just above the midpoint of a range. Qualcomm will report their earnings on November 6th, so you'll hear from them about a week after Intel. I'm sure they'll be asked a lot about them on the conference call. Taiwan Semiconductor, you might not be able to see it here, but just confirmed a new higher high. It's absolutely beautiful. Now, will it drift all the way to the top of the channel? Not necessarily, but pullbacks on Taiwan Semiconductor, probably back to the 150, 160 range, certainly could be bought. Now, here's a buying opportunity. Doesn't mean it's a smoking hot like clearance sale buying opportunity, but it's certainly not terrible. You should have support down here for ASML at about 580 on this one. Now it's currently sitting at about $725 per share. So that's about $40 in downside if you want to look at it from that perspective. But again, you have to assume that the trend that a stock is on will continue. It's like your wife. As long as your wife loves you, you have to assume that tomorrow she's going to wake up and love you too. Although those things can obviously change on a dime as well. It hasn't for me. I'm in a hotel only because I'm traveling relationships with my family, and my wife continued to be strong. I'm sure you were consistently worried about that. But we're in a 20-year uptrend with ASML. You have to assume that the past 20-year uptrend with the stock is going to continue. If you can predict that 20-year uptrend is going to end right now, well, you're a better investor than I am, and you probably have a lot more money in your bank account than I am. I am not that smart. I'm going to assume this uptrend continues. So we have $40 in downside. You can, number one, wait for further downside, get this one at a lower price. The other way to look at it is, what's your risk reward? You might have to sit through, and your stomach might have to churn through $40 in downside. So you watch the stock go down. You're not going to sell it as it moves down. In fact, you're probably at dollar cost averaging as it moves lower. But what's your upside? It's a new higher high up here at, we'll call it 1140, maybe high, even higher than that, over 1200. So folks, you have $400, $500, $600 in upside and $40 to the downside. And as I look at my math here, it might be slightly more than that. You might be looking at $100, $200 to the downside, but that's still, you're still looking at kind of a 2 to 3 to 1 risk reward setup on something like that. And those are the types of setups that I like. I'm certainly looking to start a position in ASML. Now, will it be larger than my Nvidia position? Would it be larger than an AMD position? Would it be larger than Google, Microsoft, Apple, Amazon? No. This will be a part of my portfolio, but I am looking to start that relatively soon. NXPI, we've talked about numerous times, just continues to look good from a technical perspective, continues to channel higher. You get earnings on this one in November, first week of November. Now, ARM Holdings, just looking beautifully technically, at least in the shorter term. I think you could even factor that in to the longer term trend on this one as well. You get earnings on November 6th, because what I see here is potentially that formation from the higher highs coming. So if this company can report strong earnings the first week of November, your upside, not necessarily on earnings day, but drifting into this report, is well north of 200. In fact, I can't even see it on my graph. But yeah, you still have $50 in upside on that one. I would take profits on a company like that. SMCI, we now have some positive momentum on the stock. Now, I wouldn't necessarily call it positive momentum. As you can see on the bottom, you start to factor some of this stuff in, but you do have a decline in volume, and so a little bit less interest on the stock. Complicating the situation is we still don't have an annual report on this company, but they are going to report their earnings, we assume. If they don't report their quarterly earnings, this would not be good. But you're going to get earnings on this one on Tuesday, October 29th. And there's a lot of investors out there like me that just don't want to play the game with this stock. Now, if you're a speculative guy and you like to play the games and almost like this is almost like a casino to me, by all means, that's your prerogative. You could get paid off here because, like I said, we've broken out of this downtrend. We've made some positive momentum here. Typically, when you break out of these downtrends, there is a retest. So we could report earnings and it could cause a retest of this trend. That actually wouldn't be overly alarming for me if you found footing right here at $39. You find footing right here at $39, then we could actually be in the start of a newer uptrend. It would materialize out of this cluster of candles. It's still so speculative, and I pointed out other stocks here where the technical patterns are far more secure and concrete than this one. Your trend on this one is still looking ugly. You do have consolidation down here. If this one continues to move to the downside, you should have some shareholders catch this one in the $20 range. But for me, this one is just far too speculative. Now, Dell Computer still looking absolutely beautifully technically. This one's at a top of the range, but I suppose it could continue to drift higher. Dell will report their earnings Tuesday, November 26th. So we got a long ways to go for Dell. Now, Micron bounced off that area that it kind of created right before earnings. We've gone from 84 to 111 on this one, but I think you still got further upside. I think you could retest a new high on this one, up to 160. So you still got 50 to the upside. You wanted to set a stop loss. I mean, that one's still looking absolutely beautiful. Lam Research reports their earnings Wednesday, October 23rd. We'll probably cover it here on the channel. We won't separate it out in kind of its own video unless you have a big drop. You have a big drop on this one. It does create a buying opportunity down here in the 50s. And then finally, Applied Materials looking beautifully technically, just in this nearly decade-long uptrend. We'll see when Applied Materials reports their earnings. I believe it's pretty late. Yeah, November 14th on this one. So it's a while, but you have other equipment companies reporting before then, so that could move Applied Materials around. We are sitting here at the middle of the channel, so this is one where you can start a position. Just understand that even if the trend and the stock continues to move lower, well, you will have much lower prices, but the trend will still be intact. Folks, that was the Semiconductor Show for October 20th, 2024. I hope you all have a wonderful day. I will see you again next week. Good luck with your investments.